Hello, Tim Karen here from Mortgage Choice in Kingsley, and what a crazy month it has been in my world and probably in your world as well. In fact, our world, the entire world. I thought it might be useful to just give a quick summary from my perspective as a mortgage broker of what's been going on, the things I've been focusing on over about the last month. So, I'll start with the Reserve Bank. The Reserve Bank ordinarily meets on the first Tuesday of every month, except for January. March was no exception to that. What was an exception, after they met in March and dropped the official cash rate down by 0.25% to 0.5%, which at the time was the lowest in history, is that on the 18th of March, they met again. That was the first time the Reserve Bank, since inception in 1965, had ever met twice in a month. It was an emergency meeting to talk about COVID, and they decided to drop the official cash rate again by another 0.25% down to 0.25. The Reserve Bank governor was very clear in his speech at the time that that's as low as he intends to go, because he believes that the pros of going any lower are outweighed by the cons. And if the economy needs to be stimulated further, it can be better done in other ways than dropping the official cash rate any further than 0.25%. And he compared Australia to the other four strongest currencies in the world by his metric, where all five of these countries have now dropped to 0.25 and are saying they're not going any lower. At the same time, it was pretty clear to me anyway that he's targeting a 3-year period. So he said that there is no limit on the amount of money that Treasury can, he didn't use the word conjure, but I'm going to use it, slash print, in order to buy Treasury bonds. The point being that essentially the Reserve Bank conjures money and uses that to buy bonds from the government, so the government buy bonds from Treasury, so Treasury now has the money to do all the stimulus that it's been doing. The 3-year bond was the main target of what he said he was going to spend money on. They are going to buy bonds from other terms as well, but 3 years was the predominant term that they were aiming to get the bond yield rate down to 0.25%. The next important point was also over a 3-year term, which is they are lending money to banks at 0.25%, the cash rate, over a 3-year term where repayments don't have to be made for the first 6 months. So then principal and interest repayments do need to be made from month 7 to the end of the 3-year term, if lenders agree to then use that money to lend it to businesses on the same repayment terms. And since then, eventually, lenders came out with loan products that basically were the same thing, except the interest rates were between 4 and 5%. So the other thing that changed along with that is the government said, the Reserve Bank said that Treasury is going to guarantee the first 50% of any loans made in that way that are unsecured. That's my understanding from a little bit of mixed messaging that's been going on, but it appears that something to that effect is what's now happening. And what that means is banks are flush with cash to lend to businesses, and the way they assess loans to businesses has changed dramatically. If you can explain as a business owner how you're going to get through this period with or without government assistance in the form of, for example, JobKeeper payments, then you would get a loan in a scenario where ordinarily I would expect a customer to be laughed out of a bank. So if you're a business owner and you're going to struggle to get through, the government is basically trying to make sure that there is 3-year lending available to you to help you get through, among other things. So it was pretty clear from all of that, from hearing the Reserve Bank governor talk about that a 3-year period is what he expects to apply here. About an hour later, I think it was, the biggest bank in the country dropped their fixed rates dramatically. So instead of fixed rates and variable rates being about the same, very broadly speaking, fixed rates are about 0.5% lower than variable rates now, and that's only been the case for about the last month, since the 19th of March. What that means is there is now a significant saving to be had if you are on a variable rate or you fixed more than a month ago at a rate that probably started with a 3. And now you can get a rate in the low 2s. I'm speaking to a lot of people now who are able to save well over 1% by changing from their existing loan to a new fixed rate loan. And some lenders are offering refinance rebates of up to $4,000 if you refinance to them as well. So there's significant opportunities for people who qualify for a loan at the moment to refinance to a different lender and get a better deal, or people who have a loan but don't qualify for a loan at the moment, can't prove they've got enough borrowing capacity necessarily to refinance the loan they've already got for whatever reason, maybe they've lost their job, to stay at their existing lender and simply switch to a different product. Now, if you're already on a fixed rate and you want to stay at your lender and switch to a different fixed rate, then you're going to have to break your existing fixed rate, and that's going to come with a fixed rate break cost that may or may not be significant. So the first step there is to ask your lender how much they're going to charge you. What I've seen over the last few weeks is some customers are deciding that fixed rate break cost is too high, I'm going to stay on the higher rate that I've got. Others are going, yep, it's worth paying that because I'm going to save so much. And they're doing that. Now, if you're staying at the same lender and you've got to come up and you've got to pay a fixed rate break cost, you've actually got to come up with that money somehow. If you're proving your borrowing capacity, either to your existing lender or changing lenders, then you can include that break cost in the loan funds that you apply for. So that's the state of play in terms of what the government said a month ago and how lenders have responded. But since then, as well, as I'm sure you know, there's been job seeker stimulus, which is people that qualify for particular Centrelink payments are now receiving $550 a fortnight more. And there's JobKeeper as well, which we're yet to see the results on, but it would appear that if you're losing at least 30% turnover as a business owner, then the government is going to funnel $1,500 a fortnight through you to pay to your staff, essentially, which means the first $1,500 that you're paying someone doesn't need to come out of your pocket at the moment. It's coming from Treasury. So as an example, I don't know whether my business qualifies for that right now, and I'm just waiting to see. I think there's a lot of businesses in that position, and so there's a lot of business owners at the moment who are probably unsure what to do because they don't know whether they qualify. I think the government's well aware of this, and I hope we see some more clarity soon. If you heard about it in the early days and you're waiting for more info, you may or may not be aware that you can go to ato.gov.au/JobKeeper. There's now information on the ATO website about it that's a little bit clearer, perhaps, than some of the stuff that we read earlier, and a bit different to some of the stuff we read earlier as well. For example, there's a little bit about sole traders there that still leaves me uncertain about some sole traders in particular situations, purely because it says more information will be made available soon. I think that's it. That's 7.5 minutes of my brief summary of what's going on anyway. There's a lot more detail, and I've been focused on it roughly 12 hours a day, 5 or 6 days a week for the last month. So if you want to hand figuring something out, then there's a good chance I know the answer, and if I don't, I'll probably know where to direct you as well. I hope that helps you, and I hope you're safe, and stay inside. Cheers.